SVC Media.
Welcome to the iGaming Daily Podcast, analysing the news from the betting and gaming industry all over the globe, supported by Optimove, the #1 CRM marketing solution for the iGaming market.
In a somewhat predictable development, UK gambling faces a cold autumn as this weekend news broke that reformist think tanks have urged Chancellor Rachel Reeves to squeeze sector taxes. One think tank proposes to double tax on higher risk gambling segments, whilst the other takes the blunt measure of doubling tax on remote gambling from 21% to 42%. Led by the Betting and Gaming Council, the industry has decried that think tanks are playing fantasy economics by recommending policies that threaten the jobs and economic output of a tax-effective sector, which is yet to secure its regulatory settlements. All eyes will be firmly fixed on 30th of October as Reeves presents the Labour government's first budget in 14 years, in which the Treasury had prioritised filling in a $22 billion black hole for public services and to lower inflation at a 2% rate. I'm Ted Orme-Claye, editor of Payment Expert, and I'm here with my fellow editors Ted Menmuir and Joe Streeter, where we're going to talk about these new proposed tax hikes. First, of course, a word for our sponsor, Optimove, the #1 CRM marketing solution for the iGaming market. Right, okay, lads, let's dive into taxation then, I guess. You guys are the ones who broke the story. Could you just give me and our listeners a bit of a recap? How did this story break and what is the relevance of it?
Okay, so on the close of Friday, The Guardian published that two think tanks closely attached to kind of gambling policies had recommended essentially a doubling on remote taxes. The article disclosed that reformist think tanks of the Institute of Public Policy Research, the IPPR, and the Social Market Foundation, who have previously called for the UK gambling to face a polluted tax, they urged Rachel Reeves, the new Chancellor of the Exchequer, to increase taxes. The IPPR effectively wants to double taxes on riskier or game segments classified as riskier. And the SMF simply called for a doubling of taxes from 21% to 42%. I think that this is an article that you have to read closely in the way it's written and the way it's structured. It doesn't name direct sources, but The Guardian states that taxes are definitely on the roadmap for UK gambling. It's a very kind of broad interpretation of kind of the fiscal sensitivities of taxing any sector. So that would be kind of my interpretation of it. That's what I would say to the audience. It doesn't state that we are getting definitely taxed.
That's interesting, Ted. And I guess two kind of interesting things from the backdrop of this story are that the first one is it came during on the cusp of the investment summit in the UK. You know, Labour's really looking to kind of build this relationship with business and have allow and have an economy that enables business to continue to thrive. Obviously, this tax will potentially hinder one of the country's biggest businesses in terms of betting. Yeah, this tax will obviously hinder the betting business severely, and also maybe they've taken a page from the book of the French government and Michel Barnier, who we know that taxes are being raised significantly in France to a similar level to what they're being touted in the UK. Maybe something they're looking at. Maybe they will cast an eye on that country as well.
And obviously, as I mentioned in the introduction, it's October. We've got the autumn statement coming up on the 30th of October. Is speculation of tax increases becoming a bit of an industry ritual? It seems to be quite a regular discussion we have year over year.
Yes, and to an extent it can be expected. Look, there's always speculations of tax being increased on sectors such as gambling, tobacco, alcohol. But I'd still say or tell the audiences to look at the way the article is structured, and it's written in a very kind of speculative manner with regards to Labour's approach to governing gambling overall. Since the election or since taking government, the Labour government has stuck to the script of letting the gambling review conclude and actually settling the new terms for the industry. Gambling always faces the possibility of a tax increase, right? And I think you've got to kind of separate that out from what the article states, that it is actually facing a doubling of taxation. That is kind of like the fiscal nightmare of leadership, that kind of handling of an instant doubling on tax duties, and it would have consequences across the value chain and the growth profile of the industry.
Yeah, you raise a valid point and a really good point as well at the top of the show with the intro, that the timing of this probably, it couldn't be more tricky for the industry as we adjust to the, white paper implementations, new regulatory framework. A doubling of tax at this time would be really challenging. And from a political point of view, I just wonder if the Labour Party regret not having a budget earlier on in their kind of premiership to kind of assert their fiscal policies on the UK prior to this budget, and prior to kind of diluting maybe some of the speculation that has been around some industries.
Yeah, I think, the budget will certainly be interesting to look at, to keep an eye out for a number of reasons, not just because of this sort of the speculation we have around the tax here, but on my side of things in Payment Expert, it'll be interesting to see what any sort of investment plans they might have, things like that. Obviously, Labour as well have been trying to, throughout a lot of the election and into the sort of the early stages of government, have been trying to portray themselves as like the party of business, haven't they? And sort of building up links there. So it'll be interesting to see what happens on the 30th of October and how that could impact this ambition of theirs. But anyway, sorry, I went.
We had the investment fund as well announced by Rachel Reeves
today. Yeah. Of course, the what is it? The National Wealth Fund and the British Growth Partnership, wasn't it? Which are clearly linking in with that sort of ambition.
I guess they just underline the focus is aiming to be on business and on business growth.
Yeah, exactly. And I think we can definitely expect them to double down on that on the 30th of October. Obviously, it just also depends on whether it's also going to come with some of these potential tax rises for business as well, and not as Ted has pointed out, that wouldn't just apply to gambling either. Sorry, my little political economic rant aside, I'll try and refocus us back on the conversation. So could you just give us an assessment of the worst case scenario, as it were, that in the event these think tank recommendations are taken on board, what would be the most painful outcome for the gambling industry, do you think?
Okay, so on first analysis, the think tank's policies push remote gambling tax to a real tax charge for the business at plus 50%. And that would put it in the top echelon of European gambling jurisdictions alongside Germany and Poland, who, as we've all kind of reported on, have got very, very limited and restricted markets. So once you get past the 50% tax charge, it really changes kind of all dynamics at play of your gambling market and what it offers the consumer. I can comment on the sportsbook level. It would mean a worsening of the overall kind of product quality, a really limiting down on secondary markets, and revision across kind of all cost controls. For sportsbook, you'd be looking at less markets, less data rights, less APIs on individual markets, and thus kind of a significant reduction on the markets that you're offering to the customer. Again, going back to Germany, that's pushed up. Germany sees its kind of channelization rate at the moment. It's got a huge exposure of 50%. So that equates to, for every euro spent in the market, 50% goes to the black market. However, the other kind of big factor here is that you're imposing kind of this taxation rate at a growth market. UK is still growing, and it would really see the gambling PLCs enter another period of kind of reorganization, and you have to kind of factor in kind of job losses and the actual productivity of the market, which at the moment is going through kind of a growth stage online. That would kind of speed up the kind of dynamics of how companies transform. So you'd probably, the impact would probably lead to high street closures as operators just throw their chips online and say, well, that's the growth segment. That's where we're going to focus on.
Yeah, there's really not a lot to add there, Ted, but I kind of echo your sentiment, and I kind of agree that there could be an exodus of operators from the UK, particularly smaller operators. And I think in turn that would lead to a negative effect for players. There'll be a far less competitive market. I think we've seen some reaction from analysts that just kind of call the potential tax rises excessive and just really highlight the significant detriment they would have on the overall UK market. Yeah, I think potentially even, eradicating any levels of profitability from the UK market per some estimates, which is obviously of grave concern for operators looking to kind of thrive in the UK market, and also for the black market as well. As you said, it would fuel black market growth like we have seen in Germany, which is deeply concerning, which I think is what prompted such a fiery response from the BGC yesterday, really taking aim at fantasy economics that are at play when it comes to putting forward these proposals.
I find it interesting with how Germany has panned out over the years since the re-regulation a couple of years ago. I think, as you guys said, it's often sort of used as the example of how you don't want your market to develop in some cases as a result of sort of taxation and strict regulations. I think it's probably about time we took a quick break, and then we'll be back to dive even deeper into a bit more of this.
SBC Leaders connects the gambling industry's top-tier operators and associations to share the best ideas, collaborate on solving the biggest issues, and push innovation throughout the betting and gaming industry. If you're an operator and want to join the discussion, visit sbcleaders.com for more information.
And we're back to this episode of iGaming Daily, sponsored by Optimove. I'm Ted. I'm here with Ted and Joe, and we're going to talk a bit more about the Labour government's financial policies, I guess, and how this is impacting the gambling sector. We're being very Times-esque, Economist-esque today. So we like to dream. So obviously we've talked a bit about the budget that's coming up on 30th October, some of the stuff we might expect from Chancellor Rachel Reeves and the Treasury under the Labour government. Ted, can we just come back to you on this? How significant is this budget, and what will it tell us about our newish government?
Well, it's a brand new government, and this budget will outline the fiscal strategy of the Labour government and how it really differs to the Conservative government's approach with the generational and structural issues of the UK economy and its outlook. Reeves and Starmer have pledged not to rise taxes on working people, small businesses. That is their pre-campaign, promise for income tax, national insurance, or VAT. But you have to kind of consider the backdrop of the UK economy and of the government itself. It's been an awful first 100 days in government for the Labour, in which the party is petrified of putting forward kind of any fiscal measures that might be kind of perceived or deemed as a comeback to austerity. So, for example, look at the debacle over with the fuel allowance. The backdrop is you got a government facing a £22 billion deficit, but overall that kind of requires fiscal measures above kind of just taxing individual sectors such as gambling or alcohol or tobacco. For me, the big calls for the autumn statement will be on whether Labour presses ahead with an increase on capital gains tax, inheritance, and closing the loopholes on big business and non-dom statuses. And those are the kind of areas where the budget will be assessed, or where the budget will have the most impact.
Ted, is there a danger that amidst those kind of the sea of potential new measures there that you mentioned, the real headline grabbers, mainstream headline grabbers anyway, is there a danger that this tax on gambling, or even if we don't go as far as the proposals that were mentioned, that an increase on the tax on gambling is kind of seen as a bit of an open goal? It's not going to grab major headline, but it will. It could be a lucrative tax, as you say, to to fill some of this £22 billion hole that is so well documented since they've come into office.
Yeah, I actually agree with that, because I think once the statement comes out, I mean, the way it gets revised, if Rachel Reeves puts in, whatever type of tax increase, whether it be 1 or 2 points, right? It really just gets washed out the next day on what were the major tax measures. And also, I think what the UK media and kind of the political spectrum is that we've had a whole general election of how do we kind of kickstart the UK's economy and its economic profile, recovering from what had been a very poor Conservative government. And Labour really didn't answer that in the election. So I think the pressure is on Reeves to actually put in some comprehensive policies and stuff that actually business kind of reacts to and says, okay, these guys, well, they're a changing government, but they've also got a brighter picture of where the UK economy is going to be in the next 4 or 5 years, right? It's been a very, very conflicting decade for British sectors, manufacturing, creative sectors reacting to Brexit, exports, imports, right, across the value chain of the UK economy. And it really needs a kind of stabilizing plan, right? I don't think they're going to go tax heavy on industries because of that. I think this is much more about kind of the internal workings and the internal strategy of where Labour views the economy and where it wants the economy to be in 4 years. Again, so much has changed. I don't think that Keir Starmer can point back to the last time Labour were in government, right? It's a much, much tougher condition out there, and I think you've got a much more realistic government of what it can proceed with and what its kind of open goals are.
Nice one. Thanks, Ted. Good breakdown from our SBC's resident political pundit. No, in all seriousness, no, I think I completely agree with your points there. Yeah, I think that was a solid summary of that. I'm just conscious that we're probably starting to run out of time. So just got one more thing for you guys here. Regardless of these potential tax changes, obviously 2025 it's going to be a year of adjustments for the gaming industry anyway, right? As you said earlier, Ted, Labour seem to be committed to just letting the Gambling Act review sort of not run its course, but follow the same sort of trajectory that it has been for the same amendments and reforms to come into play. So, regardless of these tax rises, it's still going to be a big year of change for the industry, isn't it?
Yeah, because I think it always comes back to the gambling review and the pending settlement. So adjustments are already written in across the board for UK gambling. If you even look at kind of every interim statement, and they all detail higher and higher kind of year-on-year costs, and those are likely to continue into 2026 and even 2027, right? What the only kind of conclusion that we can come to is that the decade of the 2020s have just been about just outright adjustments for UK gambling. And I also think that you can no longer kind of just think about these changes on a yearly basis. I think if you're a gambling PLC, you have to take kind of each regulatory settlement and you have to kind of book that in like a period of 3 or 4 years to account for the real cost of what has happened to UK gambling.
Thank you, Ted. And Joe, is anything you want to close on there? The times they are changing for gambling?
That's a good way to close. I like that line. But it is interesting times. It will be interesting. Obviously, we've got the Q3s coming up from some of the big UK operators. So it'll be interesting to see if we hear any feedback from them, any kind of backlash, or if they kind of let the BGC do their talking, if you like. But it's already a period of transformation. We're already transitioning. The industry is kind of getting used to and preparing for the white paper changes. So to really clamp down on the competitiveness of the market with such increases in taxation would be incredibly detrimental. But we wait and see. We wait for to see if there are any tricks or treats for the gambling industry. Brilliant. On the October 30th budget.
I think that is all today, but thanks so much for going over this with us, guys. Obviously quite a meaty topic, but I think it's been broken down pretty thoroughly here. Obviously, to all our listeners, please keep an eye on SBC News and CasinoBeats for more updates on in this area. and stay tuned for the next episode of iGaming Daily. Thank you.
Thank you for listening to today's iGaming Daily podcast, supported by Optimove, the #1 CRM marketing solution for the iGaming market. If you want to find out more about some of the subjects raised today, feel free to explore any of the sites in the SBC News network or check out the latest edition of the SBC Leaders magazine. Happy reading.